Hello guys, it's me Abdul Husni FX Mentor. This is a series of courses which we exactly explain and learn more about the ICT concept. In this video, I'm going to explain about the liquidity concepts. So first, we have to understand what the liquidity is. So what is liquidity first? And we have to know what the liquidity is because we must need to understand where the money is. The markets need to generate liquidity in order to move up or down. So the liquidities are exactly hunted by the IBDA or algorithm, as I have explained it, what the algorithm is. So it's seeking the price, or the market is exactly generating liquidity, and we need the price to move up or down. If liquidity isn't already there, or where the price is, then it will be created soon. So retail basics are lack support and resistance. For example, where is the retail? They are always at the support and resistance. Like they can also be at the double top, the double bottom, and wherever you see a trend lines. All these areas are where the retailers are. So the retailers are the liquidities. These areas are the most generated liquidities to the markets. So we expect the price to be manipulated at and around these areas. Every time price is taken out of the support and resistance, double top, double bottom trend lines, because they are the liquidities and the algorithm is hunting all of the times. So now the difference of the liquidities or the types of liquidities is also very important. So trendline liquidity, range where the support and resistance liquidities are, we call ranging liquidities. So equal lows also equal highs. This is X all and X low, which means all highs and all lows, which can have equal lows and equal highs, are also a part of the liquidities. So now I'm going to show you a trendline liquidity. So there is a trendline liquidity. In a trendline liquidity, what we will see is like price is exactly moving in a upward, and this is down close candles are helping up close candles to be broken the high. So anytime you see, so there is a liquidity here, because every low is generating a resistance. So as vice versa, this is an downtrend, and every high is supporting the down close candles to be broken the low. So there is a liquidity here. So the retailers are thought to buy at the trend line. They always think that they can buy at the trend line and wait for the breakout of that trend line. They are always waiting the price to break that trend line to go short, and vice versa. With this, it creates a lot of liquidity at these areas that the markets will manipulate to grab liquidity before the large move in the markets can take place. So they always hunting and they do not know. So the wicked-minded traders are doing this. So when the wicked-minded traders are not knowing this, the market makers are making money from their mistakes. So like what you see over here, most of the time price, you place a trend line here to wait if the price breaks this trend line, and this is what you think. Like if you see a trend line is breaking the price, you think that the price will go aggressively down, but this is not what happens. Whenever price breaks a trend line, they are hunting a liquidity, because there was a liquidity resting here. They have taken out all the sell stops that are placed below these liquidities, and then when they activate, then they have run out and then remove it and price go up. That is the concept of the trendline liquidity. So in the ranging liquidities, so the algorithm is bearing orders in a same movement, like consolidating when price is ranging. So in this area, we have here a support, and we have here resistance, sorry, and we have here a support. So in the resistance, we have a buy stops, and in a support, we have sell stops. So this is a sell side, a buy side liquidity, and also a sell side liquidity in a ranging liquidity. So in this resistance, support and resistance, this can be classified as a range. So when you see both of these, don't worry, it's a range. That is the meaning. So you have to classify it as a range. So the retail traders are told to buy when price breaks here, but this does not happen. It goes down again. So at the support, and when they buy here and sell at the resistance, this is the condition, the concept they use. Retail traders are using the support to buy, and exactly the resistance to sell. This is what they use. This will generate a large amount of liquidity above and below these areas. Buy stops and sell stops. Those are the liquidities in the market. So the ranging liquidity, for example, in here, whenever price breaks this range, where we call our resistance, all retailers, they think this market will go up, but this does not happen. There should be happening like liquidity grab. All the buy stops above this area are being taken, and then the price is starting falling down. Again, you can see when price comes here, there was a ranging liquidity, which was also a sell side liquidity or sell stops. And then as you can see, they have taken the sell stops, and this is how the market exactly moves. So the equal lows, for the equal lows liquidity, so the equal lows liquidity, it is like a double bottom by the retail side of trading. This is the retailers are expecting the price to go up, but the market is going back and breaking these equal lows, then starting its real move to the upside. So people told to buy at the double bottoms, which of course generates a liquidity below this area, because there is a sell stop below the equal lows, which is the double bottom. So that liquidities needed to be taken out in order the price to start its real move. So we know that these areas get manipulated, so we expect the price come into these area levels. So it is expected the price to come and then go up. So the equal low example, this is the equal lows. We have equal low here, and whenever there is a break below the equal low, it does not mean price is going to sell. This is not real. So they are grabbing and taking a liquidity. Here there is a sell side liquidity, which is exactly placed here by the retailers or by wicked minded traders. So the algorithm is going to grab the liquidity, then price moves impulsively to the upside. So price is going upside, and that is how the liquidity is. So equal highs liquidity. So the equal highs liquidity is a double top by the retail traders, like what they do, the wicked minded traders by the retail side of trading. So people or traders thought to sell the double top or at the double top, which of course generates liquidity exactly above it, not below, above it. It creates above it. Here there is liquidity, resting above the equal high, which is a buy stops. So price is gonna retaining back above the equal highs, and then it starts its real move, and price is going to start a real move to the downside. We know that these areas get manipulated every time, and it's taking the exactly the liquidities by the market makers. They use algorithm that hunting the liquidities and generating sometimes. So we expected the price to come into these areas. For example, here we have a high, we have another high here. So above the other high there is liquidity, which is buy stops. So the equal highs, which means the double top, retailers are resting above the equal highs. So the algorithm is gonna come in back above these areas, and then you can see that they have grabbed the liquidity and then it started price to move to the downside, and this is a continuation to the downside. So after the liquidity is grabbed, so we know that price is moving down. So liquidity grabs before price impulsive goes down. So you can see they have taken the liquidity, this area which was a buy side, and price started to move down. So do not think when you have equal high the price is continuing directly to the downside or upside when we are at the double bottom. So the vice versa is the equal high, which is the double top, like what you see here. Price created a high, another high, goes down somewhere a little bit, and then it started going up by breaking both equal highs. So finally you have understood exactly the concept of the liquidity in all kinds of liquidity. I hope this makes sense, and bye bye. Thanks for watching.